Hello, people. You are welcome to my screen and thank you for joining me. On this video today, I am going to talk about market structure. Market structure is very important in financial trading because you can't just open a chart and just click on buy and sell. You need to understand the market structure. So, without wasting much time, let's dive in to the board. Now, before I proceed, if you come across this video for the first time, please smash that subscribe button right there so that when next I drop a video, you will get notified. So let's move to the board. Right here in my screen, like I've said, market structure is very important in trading in financial market. Market structure help you to identify the trend. Is the trend pushing to the upside or is pushing to the downside? Once you are able to clarify this, then you have something to trade. Now, there are three types of market structure. We have the bullish trend, the bearish trend, and we have the sideways movement. Now, giving an example of a bullish trend is now we have this when price is what is pushing to the upside. This is a high. You pull back. This is a low right here. You have another high right here that is higher than this previous high. We have another high right here. Price push. Price will trace back down again. Create another high again that is higher than this one. Create another high again. This is a bullish trend. This is a bullish market structure. Price still reverse back down again. Push up again. Pull back again, and we have another push up. This is a bullish trend. We call this a bullish market. Now, looking at the bearish trend also is when we have price pushing to the downside. This is a lower low, this is a lower high, this is a lower low, and this is a lower high. This is a lower low, this is a lower high, and also this is a lower low. Now, this is a market structure. This is a bullish market structure. This is a bullish market structure, and this is a bearish market structure. Bullish market structure creating consecutive series of higher highs and higher lows, higher highs, higher lows, higher highs, higher lows, higher high, higher low, higher high. And this is a bearish structure: lower low, lower high, lower low, lower high, lower low, lower high, lower low. Now the third part of the a market structure is when price is moving in a consolidation movement, is moving in a sideways movement like this. This is a high, price push back down again. Both highs and lows are equal. Both highs and lows are what? Are equal. Both the buyers and sellers are both what? Are both in the trade, are both in the market. They are not giving themselves opportunity. Now, this type of market like this is when it's called sideways movement because we cannot trade this kind of market because there is indecision between the buyers and sellers. Before we can trade this market, we have to exercise patience for price to break below or price break above this. So whenever I see this on the chart, I stay away from the chart because I have no direction to trade. But if I come to the chart and I see price in an uptrend, then all I will be looking for will be buying opportunities. And when I come to the chart and I also see a bearish trend like this, all I will be looking for will be more of selling opportunities. Now, that is market structure. Like I've said, market structure help you to identify the trend. Market structure simply means trend direction, the direction at which the market is going. Now, that is it. So now, moving next, right now, is now when I open a chart, this is my first, this is the first I look out for market structure. Now, after that, then I look for what? Then I map out the structure. Then I map out the structure. This is the high, this is the low, this is the high, this is the low, this is the high. Right here. Now, what do I then do? Like I've said, I will map out the market structure. So, like this. This is a brick of structure right here. This is another brick of structure right here. I take that again. This is a brick of structure right here. like this. This is a break of structure. Break of structure. This is another break of structure. Now, break of structure is when price retrace and came to and pull back up to attempt this previous high. If this previous high, if this recent high is taken out with a body, then that become a valid break of structure. I repeat, break of structure is only valid. Break of structure is only valid when price created a recent high, pulled back, definitely is coming to attempt this previous high again. If price action is able to break and close above this recent high right here, closing with a body, that gives it a what? A valid break of structure. That is it. So price give a valid break of structure right here. It push up. This will now become the low, and this become the high. This will become the recent low, and this will become the recent high that the market has created before pushing back up again. Price will trace back up and price will trace back down again, and what? It still what? Attempt this recent high again, and it was able to break and close above it. That gives us a what? A break of structure again. Now, there are times whereby market will be pushing to the upside, and it will come to a point whereby the market will be exhausted in trending. Now, price will push back down again. It will retrace like this, and also this low right here needs to be protected. If price should come down right here, um if price should come down right here, this low that needs to be protected, if price should break it with a body, that give it a what? A change of character. Change of character means that price is giving a potential change in trend. It has been pushing to the upside, and price wants to change the trend again back to the downside. So like I've said, this low right here that's supposed to be protected, price came and break below it, closing below it with a body candle. This give it a what? A change of character. This give it a change of character. I come again. Price push up, created a new high, pull back, came back again to attempt this recent high right here. If it's able to break it with a body, if it's able to break it with a body, that gives us a valid break of structure. Price again, this low right here, this become the low and this become the high, and this low needs to be protected. If price should come back to this low and price break above it with a body of a candle, it change it. Now this become the low and this become the high. It pull back again to attempt this high again. Price was able to break and close above it with a body. This become a valid break of structure. Now, we expected price to continue pushing up, but the price got exhausted and could not continue in the main trend. Now, it came back again to attempt this low right here that's supposed to be protected, and price break and close below it, giving it a change of character, giving it a change, giving it a change of character. So, so now this is this is for the bullish side. Now, price as the way price give a change of character, we expect price to pull back like so, creating a new low, as it created a new lower high. This is a lower low, lower high, push back down again for a new lower low, lower high, lower low again. Now, this will now become a valid break of structure again. I take that again. This become a valid break of structure right here. This will now be a valid break of structure. Reason this become a valid break of structure. Now, reason why it's a valid break of structure was because this low that should be protected, price has attempted it and it has been taken out with the body of a candle. This become a break of structure and break of structure. So price will keep doing like that until it gets tied again, push up, lower low. This is a lower high right here, lower low, came back again. Now, this is it. Every high needs to be protected. At the bullish side, I'm taking my time to explain this so that you can understand about my market structure and structure mapping. Now this is for the bullish side. For at the bullish side, a low need must be protected. If a low should be broken with a candle, it gives it a change of character. So now for the bearish side, the high needs to be protected. If the high is taken out with a body of a candle, it will become a change of character. So now this high right here should be protected, but this high should be protected, but unfortunately price attempted it and give a change of character again. Price is tired of pushing to the downside. Now it changed trend again, breaking this recent high and pushing to the upside. Now this will now become what? A new change of character right here. So this, I hope you understand what I'm saying. Now that is it. This is for the bullish side and this is for the bearish side. Price will keep changing the market. This is how the market move. The market move in what? In higher highs, higher lows, higher highs, higher lows, lower high. It move in trend. This is tradable. Unlike the sideways movement, whenever I see that sideways movement on the chart, I stay away because I have no I have no trade right there. For me to see that on the chart, I have no trade. So now that is it. Now before we move next to the chart, before we move next to the chart, I'm showing an example now. After I have opened the chart, identify the market structure, then I will map out the market structure, come to the recent high, Now this is it. Price like this breaking structure, higher highs, higher low, higher high right here, higher low, higher high, higher low, higher high, higher low, and higher high. We have a break of structure right here. We have a break of structure. We have another break of structure like so. We have we have another break of structure right here. Then we have another break of structure right here. Now, like I've said, for every bullish trend, the low needs to be protected. This low right here needs to be protected. Every low needs to be protected. If price should attempt the low and price break through it, it become a change in trend. So now this become my low right here, and this become the high. Now what do I then do? Is that then I will bring out the Fibonacci, take it from this swing low to this swing high, drag it up from this swing low right here to this swing high, and this will now become my other block zone, where where I expect price to come to tap in before taking a buy. Note, before price can come to this other zone, before price can come to this other zone right here, it needs to create a liquidity. Liquidity is where money is sitting. It needs to create a liquidity right here, like so. Create a liquidity right here, induce traders to enter this market, tweaking them in, making them feel that price wants to go to the upside, and what after the market move in few pips, then the market will push back against them and tap in right here and buy to the upside. This is what this is this is what a liquidity that price has created to induce traders right here. It created the liquidity. It induced traders go back against them after moving to few pips in their favor and tap into this other block zone, and price will be elevate to the upside. So this is how I trade. This is what I look for whenever I open a chart. If I come to the chart, then I see this move, then I have something to trade. But if I don't see this and I'm seeing a sideways movement, I will stay out of it or look for another pair that is flowing in my direction. So now let's go to the chart right now and look for example. We have talked about market structure. Market structure simply means the direction of the market. Where is the market heading to? Is it heading to the upside or is it heading to the downside? Now, when we have a bullish trend, what I will be looking for with what will be buying opportunities, and when we have a bearish trend, what I will be looking for will be more of selling opportunities. Now, I have talked about structure mapping. Then I also talk about um what is it called? Then I've also talk about structural mapping also, whereby break of structure is when a recent high is taken out with a body of a candle. If the body is not if the recent high is not taken out with the body of a candle, that is a rejection right there. It needs to a break of structure is valid only when we have a break of structure, only when a candlestick break and close above the previous high. That is when the break of structure is valid. So now price that is price that continue to push to the upside, the low needs to be protected. For every high and low, the low needs to be protected. If price action should break and close below the previous low, that will make it a change of character. That means that the market is telling us that I am tired of pushing to the upside. I want to change the trend. So that is that. Now let's come to the chart right now and look for at least and show you more example right here. Now right here now we have a valid break of structure right here. Like I've said, like I've said that a break of structure is valid when price action pull back, breaking the recent high, closing with a body. That is when a break of structure is valid. Now right here now, looking at this immediate one right here, this was the last candle. This was the last high that price created before pulling back. Now and also the last candle right here, the low of it was taken out right here. This I mean this is a candle that break and that take out the low of the last candle right here. So now it price now attempted this high right here, giving it what a break of structure. This is a value break of structure. We also have another value break of structure right here, and also this become the low and this become the high. This become the low and this become the high. Now this become the low and this become the high. So now we have a break of structure right here, and we also have another break of structure right here. Now now what do we then do? This become the low and this become the high. So now, like I've said earlier, for every low needs to be protected. If the low is not protected and price is able to break with a body that change the trend to the upside. So now this was the last standing low. Before this become the low and this become the high. Like I said, that it need to be protected. Now this is it. Price attempted this low right here, and this low was cleared with a body of a candle. As you can see, we have a change of character right here. Price continue pushing up, pushing down again. It changed the trend. Price as in price that was pushing to the upside again. Price that was pushing to the upside with a bullish momentum. It came here right here, attempted this low right here. This low was taken out with a body. It changed the trend to the downside, which signified that it's telling us that the trend is exhausted, pushing to the upside. I want to push back down. So right here now we have the bearish trend. Now this become the high and this become the low. This become the high and this become the low. So now price pull back again, came back again to attempt it again. We have a valid break of structure. We also have a valid break of structure, and we also have another valid break of structure right here. This become the low, this become the high right here, and this become the low. Like I've said, like I've said, whenever we have a bearish trend, the recent high needs to be protected with the recent high needs to be protected. If price should attempt that high right here and close with a body, it gives it a change of character again. Now right here now, we have a change of character right here again. What is it? Because price has come to attempt this recent high that is here. Price attempted it and closed above it with a body, giving it a change of character again. Now, what do we then do? This become the low. This become our new low right here. This become our new low, and this become our new high. Can you see? Now, now, now right here. Now this become our new low right here, and this become our new high right here. Price pull back again, attempted this high right here. Price attempt this high right here, and what? And it was able to break and close above it with a body. This become a new break of structure. I hope you understand what I have said so far. If you enjoyed this video, please smash that subscribe button right there. So now we are done with that. Now when I've gotten a new low and a new high right here, then what do I then do next? Then I will bring out my Fibonacci tools and measure it from the point of, from the low right here and to the high right here. So this level right here, this is the order block level. This is the order block zone that I expect price to create right here. Now price has created a liquidity right here. Like I've said, price needs to create liquidity before tapping in to the zone. Price has created a liquidity right here. This is a liquidity right here. After we have a value pullback, price induced traders create a liquidity, induced traders to buy the market. They bought, and what the price did, price reversed back against them. Those people that bought around there, definitely their stop loss will be somewhere around here. Price is about to tap into the zone right here before taking a buy to the upside. So now, like I've said, I use the fib again from this low to this high to measure the fib level retracement. This in between the 618, in between the 61.8 and 78.6 Fibonacci level. That is the discount golden zone level. Now, after taking out the inducement, price tapping, and we should expect a buy from this level. So right here. So I hope you enjoy this video. Please smash that subscribe button right there. This is where I am going to stop on this video. I hope I have talked about market structure, break of structure. I have talked about market structure. Market structure refers to the direction at which the market is going to. Is it going to the upside or is going to the downside? Once you are able to identify the market structure, then you have something to trade. But when you come to the chart and you see that there is no direction, price is moving in a sideways movement, then you stay away from the chart, or you go look for another pair that is trending. After that, I talk about structure mapping, break of structure, change of character. Break of structure is when a recent high, price pullback, created a high, a pullback, price now still go back again to attempt that recent high. If price is able to break above it with a candle, that makes it a valid break of structure. And note, the low needs to be protected. If the low needs to be protected. If the low is not protected and price to come back to attempt that low, closing with a body, that makes it a change of character. The market tell us that I am tired trading to the downside, to the upside. I want to change trend to the upside. So that is where I am going to stop on this video. Thank you for watching to this very end. Thank you. Bye for now.